1000 is the quantity, price is 3 rupees. 1000 is the quantity, price is 2 rupees. What is the average price when we consider these two values? General discussion. What is the average price? What is the weighted average price? Tell me.
2.25.
2.5.
Oh, sorry, 2.5. Yes.
All of you?
Yes, sir. Yes, sir.
Now my quantity is this much. This is weight I am considering. This is the price. So weight into price 3000. Weight into price 2000. My cumulative is 5000. Divide with weight. Weight is how much here?
2000. 2.
How much you are getting? Is it the same or different? Whether it is a weighted average price or average price? Is it same or different?
Same, sir.
Okay. Now, 1000 shares, 2000 here, 2000, and here is 2. What is the average price and what is the weighted average price?
Average 2.5, sir. Weighted average price 7,000, 3,500.
How much it is?
3,000. 2.33.
Now weighted average price is equal to weighted average price.
Average price not equal to weighted average price.
So which is the best solution? Average price is best solution or weighted average price is best solution?
Average price. Weighted average.
Weighted average. Weighted average will take into consider the weight. Here 3 plus 2 only we are taking. We are ignoring this 2000 shares which is having more weightage. So that is not justifiable. Okay. When company understanding that simple average and weighted average, priority goes to weighted average only. Suppose a company is there, the company issued in the beginning 100,000 shares, 100 rupees, and up to whole financial year, the company has not issued any share, 100. So whenever we are calculating EPS, net income minus preferred dividend if applicable, and number of common shares when you are taking, if there is no transaction of either issue of new shares, either buyback of shares, or whatever it may be, the transaction. So we need to take here 100,000 only. However, during the financial year, there are some 20,000 new shares issued. There are some stock dividend is declared. There are some buyback of shares. Buyback is known as treasury stock. We will be discussing. There is a split is there. Split up of share is there. So when the transaction in any financial year, any new shares are issued, any stock dividend, we will be discussing all these things. Any stock dividend is declared, or any treasury stock is purchased, any same shares are purchased in the market by the company, or then any split is there. So in that case, we need to calculate the weighted average. So in that case, EPS will become net income minus preference dividend, if applicable, cumulative, non-cumulative condition basis, divided by Wong-Su, weighted average number of shares, number of common shares outstanding. Net income minus preference dividend divided by weighted average number of common shares outstanding. Wong-Su need to be calculated. Weighted average number of common shares outstanding need to be calculated. Say for example, there are 100,000 shares on January 1st. After that, in 1st of July, they have issued 20,000 new shares. In this case, any one single transaction, we can't take 120,000 shares as it is. We need to calculate weighted average number of common shares outstanding as per the generally accepted accounting principles. How we'll calculate? We'll calculate from 1st January to before this date, how many number of 100,000 shares outstanding in that particular year. How many number of shares outstanding in this particular year? How many months it is outstanding 100,000 shares?
6 months.
So 6 months. We need to take the 6 months.
6 by 12.
6 months. Okay. In that way,
Yes.
we need to take it in this way. Now, so that means we need to calculate 100,000 into 6. Now, when 20,000 new shares are issued, means old share how much? Old shares how much?
100,000.
1 lakh.
New shares issued 20,000 means now total number of common shares how much on 1st July?
120.
120.
This 120,000 shares outstanding, if no other share issued or buyback is given, how many shares are outstanding? How many number of months this 120,000 shares are outstanding?
6 months, sir.
6 months.
So 100,000 into 6 is equal to how much as per weighted average? It will become how much? 600,000. And this will become how much?
720.
720. Now tell me how much total?
1320. 1320, sir. 1320,000.
Yes. This is the total weight after multiplying. So what is the weight here? We need to consider 6 plus 6.
12.
1,320,000 divided by 12. Now tell me what is the share outstanding?
110,000. 100.
110,000. Instead of calculating like this, weighted average can be calculated in this way also. 100,000 into I will be calculating 6 by 12. 120,000 I will be calculating 6 by 12. 100,000 6 by 12, how much it is coming?
50,000.
50.
50,000.
120,000 6 by 12 coming how much?
60,000.
What is the total?
Okay.
Is it tallied? So we will be doing in this way the weighted average, and this 110, if say for example 1,100,000 is the net profit, there is no preference shares at all. So the EPS for that particular financial year will be 1,100,000 by 110,000 shares. It is not 120,000. It is not 120,000 shares. This is the practice, generally accepted accounting principle of US laws, saying that we need to calculate in this way. Weighted WONKSU is need to be calculated. Weighted average number of common shares outstanding. Is this point clear to everyone? If you have any doubt, ask me.
Sir, that 120,000 you multiplied by 6, right? So that means that is for the rest of the 6 months,
Rest
right?
of the 6 months. Rest of the.
Okay, thank you, sir.
Okay. Is this point clear to everyone? If you have any doubt, ask me. Then we are discussing now buyback of shares. This is called treasury stock. Whenever a company thinks that from market, whatever it may be the reason, there are different reasons are there. They can buy back its own shares. So the company can buy back its shares from the market. Say for example, same example, let us take 100,000 shares are outstanding. On 1st July 2020, the company has purchased its 10,000 shares on 1st August instead of 1st July. Company has purchased its own shares from the market. Calculated the weighted average shares for that particular financial year. How many number of shares outstanding from 1st John to 1st August means how many months? 7 by
7
6,
months.
correct? Okay. Now 10,000 shares are purchased back means how many shares outstanding in the market?
90,000.
90,000. So remaining shares outstanding is 90,000. So 90,000 divided by 5 by 12 need to be calculated. How much now?
58,333.
Okay, this one?
90,000 into 5 by 12. 37,500.
How much this is?
95,833.
So in this is now Wongsu. Understood? Is it clear to everyone? Treasury stock means company is buying its own shares. When treasury stock means it is not outstanding share, and no dividend is also paid on outstanding shares. And while calculating EPS also, that will be removed from the calculation. Is it clear this point?
Yes.
Okay. Stock dividend. So dividend can be declared in two ways. One is cash, another is non-cash. When cash is declared, there is no issue. Non-cash, again, there are some disturbance. Please mute your phone, please. If your area is not suitable for discussion, please mute. Thank you. When dividends can be declared cash dividend and non-cash. If company is declaring non-cash dividend, it can be declared in two ways. One is a stock dividend. That means shares are issued. Shares are issued. Another is property dividend.
Assets.
Assets will be there. So when the company is issued stock dividend, indirectly what happened? The returned earning converted into number of shares. Returned earnings are converted into number of shares. Returned earnings are converted into number of shares. This is nothing but stock dividend. Is this point clear to everyone?
Yes, sir.
Returned earning we are using and credit the common stock. I'm sorry, this is wrong.
Yes, sir.
Understood all of you? Is it clear to everyone? In the balance sheet, let us discuss. Balance sheet, we have shareholders equity in this way. Common stock outstanding 100,000 shares at the rate of 10 each. Outstanding capital is 1 million. The company is having retained earnings 3 million. 3 million. Now the company has declared stock dividend. Stock dividend means company is using cash officially. Not declaring dividend is also nothing but the company using retained earning unofficially. Stock dividend means they need to satisfy their shareholders. So that's why the company what is doing, from 3 million, we are transferring 1 million to common stock, and this will become 2 million. And this common stock will be 200,000 at the rate of 10. Now it has become 2 million. The only change in the change of name only. Returned earnings decreased to 1 million and it will become 2 million, and common stock will become now 2 million. That means 200,000 shares into 10. And returned earnings will become 2 million. From this is the change. So this is nothing but the stock dividend. Is it clear to everyone? Is it clear to everyone?
Yes, sir.
I have a question here.
Okay. Now you tell me, previously 100,000 shareholders are there. Now it has become 200,000 shareholder, means each shareholder is getting how much?
One share.
One share. Each shareholder getting additionally one share. So what we will do, 100,000 shares, to make it, already one is there previous, now one additional share we are issuing. Now it will become how much?
2.
So
I mean,
100,000 into 2, so it will become 200,000. Understood, all of you? 100 is the old, 100,000 is the old. Now to make it 200, one shareholder is getting, already one is there already. Another shareholder is getting one more share, right? So simply
So it
what
will
we will
dilute
do,
the earnings per share, no, sir, then?
yes, of course, written EPS will dilute, no? So 100,000 into 2. So now it is becoming 200,000 shares. Is it clear, all of you? Is it clear, all of you?
Yeah, clear. But I have one question here.
Yes,
When
please.
you convert that stock dividend, right, from the retained
Yes.
earnings to
Yes,
the value will be converted to this stock, the shares.
correct.
So when you're converting that, the price, the $10 you mentioned.
Yes.
So how do you decide that? Is it based on the market rate or is it the original rate of share price?
It will be market rate, but share capital face value will be 10 only. Rest will go to the APIC. Rest will go to the APIC. 0 to 25% if the stock dividend is declared. 20 to 25% and above is there. So normally, generally accepted accounting principle says that 0 to 25 will be as per the market value. If it is more than 25% of the current outstanding shares, so in that case, it will be issued only for the face value only. This rule is there as per the generally accepted accounting principle. Understood, Prasad?
Okay. Yeah, that's my question.
Small stock dividend, big stock dividend, large stock dividend. 0 to 25, it is considered as a small stock dividend. In that case, what is current market price? With that we will issue. If 25% above, that means, say for example, the company having 100,000 shares. If company issuing only 20,000 common stock, so it is nothing but 1.2. So it is 0 to 20%. So up to 25%, it is a small stock. More than 25%, it is considered as a large stock. In this case, 20,000 at market value. That market value split into the face value and rest is APIC, additional paid in capital. We will call in India, it is share premium in this way. So when company is issuing 0 to 25% means we will issue at current market value. If it is more than 25% means we will issue only to the face value. Is it clear?
So why the company should convert their retained earnings to stock dividends, sir?
What will happen for the company? Officially, they can use these shares. They are not paying cash. Cash crunch. Cash is king everywhere. So if you are issuing stock dividend, there is no need to pay cash to the shareholders. That cash company is using for the further ventures, additional whatever it may be, projects are there, it will take up easily. Okay. Say for example, the company having presently 100,000 shares. On 1st August 2020, company issued 20,000 stock dividend. Right? Understood? Now,
Yes,
how to calculate weighted average? First of all, tell me how many number of shares are outstanding here?
100,000.
100,000. multiplying with a weight. On 1st August means this shares outstanding for how many months?
7 months.
7 months. Is it clear now? Up to here clear now?
Yes, sir.
Okay. When company shares 20,000 as common stock, that means whenever 20,000 shares are issued here, from this point to previous up to January, whatever it may be, the shares are there, that will be inflated. Not only this, up to January, how many number of shares are there that need to be inflated. For 100,000 shares, 20,000 issued means it is 0.2, no? Nothing but 20%, nothing but, right?
Yes, sir.
So here we need to multiply with 1 is already there plus 0.2, nothing but how much? Each share will be inflated to 1.2. Now this share will become how much now? This share will become how much now? If we are multiplying with 1.2.
120.
120,000. 120,000. Now on 1st August, we have issued 20. So now these shares already 100 shares. Now 20,000 shares issued means this is how much now? These shares. Now total number of shares how much? On this date.
120,000, sir.
How many months?
5 months.
5 months.
5/2. So whenever stock dividend is declared, from the point, this point to the next point, previously, whatever it may be, the shares are there outstanding, all will be multiplied with the 1.1, if 1.2. If 20,000 shares are issued means we need to multiply with 1.2. If 30,000 shares are issued means 1.3. If 40,000 shares are issued means we need to check how much here. So 100,000, we need to check how much it will in that way. So 1.3, 1.4, 1.35.
Sorry, sir. How you got 1.2?
This how much percentage here? Out of 100,000, okay, 20,000 shares means how much? 0.2.
Okay. Okay.
So previously we have 1 share. Now additionally each share is getting 0.2 additional share. So that means now each shareholder will become 1.2 shareholder. Understood?
Okay, sir.
Is it clear? Now total outstanding shares will be 120,000. Now you might be having a doubt. Why inflating to the from this date to above all? What is the reason? What is the reason for this? What is the logic behind this?
Because dividends are declared in the beginning of the.
Yeah, we are using from where? We are using from where? Retained earning, no?
Yeah, it's in the from the beginning of the.
From the beginning, it is already there, so it is need to be inflated from that point to up, not down. I am saying we are not going to inflate down. From the point where it is inflate, that means declared stock dividend. From that to up, we need to multiply with this factor. 100% shares are issued means 2. 50% shares are issued means 1.5. 35% shares are issued means 1.5. All the categories above this point should be inflated. Understood, all of you? Is it clear?
Yeah.
Yes.
The another point is stock split. Stock split is 2. One is positive, another is reverse. That means for every 2 shares, every 1 share they are issuing 2 for 1. 2 for 1. They will give you, every 1 shareholder will get 2 additional shares. 2 shares. So that is considered as a stock split. So what they are doing, one share they are converting to two. One share they are converting to two. This is considered as a stock split. This is considered as a stock split. Whenever there is a stock split is there, say for example 100,000 shares are there on 1st August, for every that means two for one is issued. That means for every one share now it has become two shares. So whenever it is there, so we need to inflate like stock dividend, how we inflated, the same way we are going to inflate. Now this shareholding, first we calculate 100 into 7 by 12, and whenever there is a stock split is there, so every one shareholder now is getting two shares. So simply we are multiplying with 2 here. Now this shareholders have become now how much? Now this 100,000 shares issued one extra shares means they have become how much now? 200.
200,000.
Now it is for 5 by 12. So we are going to calculate 200 into 5 by 12 here for the remaining months. And here we are inflating with 2. So whenever the company has given 3 for 1, they will give in the question, or 2 for 1. So that means every one shareholder now has become two shareholder. They have issued 2. So previous shares have been cancelled. Now they are going to be issued. Stock split doesn't change the share capital. Say for example, 100,000 share face value is 10. What is the share common stock dollar value?
1 million.
1 million. Now I am changing these shares to every one shareholder got 2 shares. Now this has become how much? 200. Now this value will become half, that is 5. Now 200 into 5 will become how much share capital?
1 million.
1 million. There is no change in the total capital, but number of shares are increasing in the stock split, in the positive stock split. Reverse stock split is what? 1 for 2. For every 2 shares, they are issuing only 1 share. So in that case, this will become 50,000, and this we are going to multiply with 2. This will become 20. So now 500 into 20 means again it is 1. This is the reverse stock split. This is positive stock split. So whatever it may be, stock dividend or stock split, whether it is reverse or positive, from the point to up, all shares should be inflated. So this is the concept of stock split. This is the concept of stock dividend. This is the concept of buyback of shares. Is this clear? These all concepts to you?
Yes, clear, sir.
Clear, sir.
Yes, sir.